15 Best Investments of 2021 to 2022. Hello guys, money is everything, right? Well, basically, we all have limitless desires that can't be fulfilled by a fixed amount of money. So if you want to expand your money to complete your desires, then this video is for you. Scoot your chair and watch this video till the end, because today we are going to tell you the 15 best investments that will increase the number of your bank account. But before we enter into the video, make sure to do these 2 easy steps. First, subscribe to the channel and don't forget to press the bell icon. Second, leave a thumbs up to the video. With that being said, let's go. Number 1. Gold and silver. Gold and silver are unique assets because they are highly liquid, yet scarce, so it's a luxury good as much as an investment. Gold and silver are in no one's liability and carry no counterparty risk. As such, it can play a fundamental role in an investment portfolio. Both gold and silver act as a diversifier and a vehicle to mitigate losses in times of market stress. It can serve as a hedge against inflation and currency risk. If you have bought 10 grams of 24-karat gold in 2009, which are worth 14,500 INR back then, now its worth is almost 50,000 INR. So, as we can see, gold and silver's prices are increasing day by day. So if you buy them today, it would ultimately make you rich in the future. Number 2. Real estate. Real estate investment offers a number of benefits. A well-chosen asset portfolio can provide investors with predictable cash flow, excellent returns, tax advantages, and diversification. And it can allow them to leverage real estate to build wealth. Investing in real estate generates income from rental income, appreciation, and profits generated from business activities that rely on the property. Basically, the world is picking up the pieces after the pandemic and millions of people are turning to rentals, either because their mortgage was no longer affordable or because they moved to a new state for a fresh start. So if you have the funds for a down payment and the credentials to secure a mortgage, you can leverage your investment and profit from real estate. Number 3. Cryptocurrencies. Owning a few cryptocurrencies, such as Bitcoin, can diversify your portfolio, since cryptocurrencies have historically shown little correlation with the US stock market. Cryptocurrency will grow in popularity over time, and investing directly in some crypto may make sense as a part of a diversified portfolio. Since coins are limited, popular, and secured, as no one can steal them from blockchain, so the demand for tokens is increasing per day, as the risk in them is also getting elevated. But as per the reports, the growth in long-term investment is higher as compared to loss, so it is definitely a shot to invest your money. Number 4. Stocks. Over the years, the stock market has created enormous wealth. The S&P 500, which consists of 500 of the largest publicly held US companies, has on average returned 8% to 12% per year. At that rate, $10,000 invested 50 years ago would have grown to more than $420,000 today. To produce the highest returns, investors with money they won't need for a few years should consider investing in stocks. So when an investor waits to invest that money, it is more likely to have a negative impact on their returns than a positive one, which is why the best time to buy shares of a great company is generally now. Number 5. Banks. Although we dislike banks as much as everyone else, one of the main reasons to invest in banks is that in times of pandemics, banks are usually the first ones to be rescued by the government. So if there's an opportunity to put some money aside, you should do so. We like banks because they pay dividends regularly, so it's a passive income source. They also grow their stocks. Citigroup, for example, holds the largest stake in our banking share. Since we invested in stock, we have earned a 40% return. But what you might find interesting is that they also pay dividends 4 times a year, and the rate is $0.51 per share owned, where the share price is around $60. Number 6. Electric cars. The electric car sector has been the biggest winner on the stock market, despite the industry's push against it. Despite the oil money, the numbers will tell you everything. Tesla has returned 650% year to date. If you bought Tesla stock at the beginning of 2020, you would have around $65,000 now. Aren't you surprised that you got 65 times the profit in just 1 year? Are you interested in knowing more about the even crazier part? Well, okay then. NIO. Have you heard of it? In other words, NIO is like Tesla in China. They are the largest electric vehicle manufacturer in China and the most likely to win the EV market there. NIO has achieved a return of 1,250% year to date. If you had invested $10,000 in NIO stock at the beginning of 2020, you'd have over $125,000 today. If one was paying attention to what is happening in the electric vehicle space, you could have become a millionaire in 2021 with a $70,000 to $80,000 investment. And the year isn't even over yet. Number 7. Hotels and travel. Most people think of tourism when they consider a vacation to a new destination, a beautiful vineyard, or a hike in the mountains. Few people consider tourism as a means of earning by investing in it and developing their portfolio. Zion Market Research estimates that the global hotel market was valued at $147.57 billion in 2018. The hotel industry is predicted to generate $211.54 billion in additional revenue between 2019 and 2026. In a few short years, that amounts to a compound annual growth rate (CAGR) of 4.6%. So, as we can see, the tourism market is definitely one of the leading sources of income, so you should invest your money in it. Number 8. Renewable energy. By investing in sustainable energy, we can protect the environment and improve our health. Using renewable energy reduces pollution and decreases disease rates. Further, it reduces the emission of greenhouse gases like carbon dioxide. So, renewable energy offers many benefits, including low-cost energy efficiency, low environmental impact, and reusability. According to a study by Bloomberg New Energy Finance (BNEF), renewable energy will account for 77% of new power generation investments by 2050. According to another study, 75% of Americans prefer clean energy over fossil fuels. Number 9. E-commerce. In this digitally centric world, online shopping has become a normal part of people's lives. Statista estimates that e-commerce will account for 22% of global retail sales by 2023, compared to 14.1% of the global e-commerce retail sales in 2019. This percentage is high. More than 75% of people shop online at least once a month. Creating a strategy for people who purchase online can earn you more money than anything else. Number 10. Index funds. Index funds are considered one of the best investments you can make. Index funds are mutual funds or exchange-traded funds, ETFs, that track the performance of an index such as the S&P 500. The investments in an index fund are approximately the same proportions as those in the index the fund tracks. Indexes are usually based on a particular sector, geography, or stock exchange. Buffett bet $1 million on an S&P 500 index fund, beating hedge funds over 10 years, and he won by a landslide. So just like him, you can also earn some money from this. Number 11. IT department. Everyone in the world has experimented with working from home. Zoom has completely crushed Skype, a company that has been the main player in video conferencing since we can remember. Online purchases were made, food delivery became the norm, we consume more content than ever, and it is the revenue source for restaurants. If you'd bought stock in any big tech company at the right time, your returns would have been 30 to 50%. Apple is at 60%, Netflix is at 50%, Google, Facebook, and Microsoft are all around 30 to 40%. Nvidia came out on top of the pack. Their year-to-date return is 125%, and they are the largest graphic card manufacturer. Number 12. Pharma and healthcare. The government is spending more on healthcare due to the coronavirus pandemic. By 2025, India aims to spend 2.5% of its GDP on public health. The country currently spends 1.15% of its GDP on public healthcare. However, spending on healthcare has gone up across the world, which is good for the pharma sector in India. The US generic drug market was worth a whopping $115.2 billion in 2019 and could exceed $190 billion by 2024. Number 13. Bonds and securities. Bonds and securities are also low-risk investments. The US government, state and city governments, or private companies can issue bonds. An agency of the US government may issue mortgage-backed securities, but a private company may also issue them. Number 14. Fuel and petrol. When the petrol ran out, we were ready to buy, and it proved to be a great choice. We see everything fuel-related as a great medium-term investment. Our strategy is to sell a percentage of our high-return stocks regularly and to transfer that excess capital to index funds for safekeeping. Number 15. Your employer-sponsored retirement plan. Even if you don't have any money, this is probably the easiest way to invest it. There is no limit to the amount you can designate from your paycheck. It can be as low as 1% or as high as 20%, depending on the rules established by your employer. This method allows you to invest without a large nest egg. By adding small amounts to your account with each paycheck, you'll be able to invest in any investments that your available capital and the employer plan will allow. The best part is the tax benefits. In addition, your contributions are tax deductible, and the income you earn on your investments will not be taxable until you begin withdrawing funds at retirement. It will also be like getting free money if your employer matches your contributions. Even if you don't have much cash to invest, investing in your employer-sponsored retirement plan should be one of the first things you do. And that's it for the day, guys. Consider liking and subscribing to the channel. See you in the next one. Until then, peace.